Hello and welcome to another episode of Investment Academy. So far, we have covered the basics of stock market, how it works and other details. And as I've probably mentioned 1,000 times, understanding a company's fundamentals before investing is crucial. After all, if you don't know what's happening behind the scenes, investing becomes less like a smart decision and more like a Bollywood-style gamble. But here's the twist. These fundamentals like profits, losses, and sometimes even CEOs don't stay the same. Companies keep evolving and so does the market. So the big question is, how do you keep up with all these small changes without turning into a news junkie? Let's go step by step. Step 1. Let's start with some basics. Financial news portals and apps. Think of these as your morning cup of chai with the market. Apps like Money Control, Economic Times, and even financial feeds on apps like Bullsmart give you quick updates. For instance, if Reliance announces a big partnership, you'll probably get a notification from one app or the other. So you're not the last one to know when your friend brings it up at the gathering. You don't need to scroll for hours. A quick 5-minute headline skim can help you spot major moves. It's like checking your Insta feed, but for stocks. Step 2. Quarterly reports. The market's report card. Alright, I know what you're thinking. Quarterly reports. Isn't that for finance nerds? Well, think of them as a report card companies don't want you to see. Each quarter, companies lay it all out. Revenue, profits, losses. It's like finding out that restaurant you love really has the secret ingredient, or is it just overcharging for the average dal makhani? For example, if XYZ company shows a sharp dip in profit because of rising material costs, that's a red flag for investors. You don't need to read every word. Just catch the key takeaways, which you can often find summarized online. It's enough to know if the company is thriving, surviving, or nosediving. You can also feed the whole report to ChatGPT or other AI to give you the key takeaways and summary. Step 3. Analyst reports and research summaries. Expert opinions made simple. Don't worry, you don't need to turn into stock analyst. Luckily, there are people who do that for a living. Brokerage firms and investment platforms often release reports that break down market trends and company analysis into bite-sized pieces. Think of it as having a friend who's super into finance, always analyzing things and just texts you the gist of it. For instance, if you're curious about HDFC Bank, these reports might say something like, solid growth in retail banking, but watch out for rising NPAs, which translated means good performance overall, but be cautious. With these reports, you get insights without needing a magnifying glass. Step 4. Investment research apps. One-stop shop for busy bees. Let's be real. We're all busy. Not everyone has time to dive into reports and financial news every day. That's where investment research apps come in. There are plenty of investment apps that can give you tailored insights on your portfolio with recommendations and curated market updates. Just a few minutes with these apps and it's like having a mini financial advisor in your pocket. If you can also take subscription of market reports, analysis and recommendations from a valid source. Step 5. Social media and podcasts. Your casual market classroom. This one's easy. Follow some market experts on social media, check out their tweets, watch their YouTube videos, or listen to podcasts on the way to work. It's a casual way to stay in the loop. Imagine scrolling your feed and suddenly spotting a post about why the tech sector might boom next quarter. It's convenient. Plus, some of these experts have a way of breaking things down with humor. So that will be it for how to stay updated with the market for beginners. Now, a quick reality check on what not to follow. First is random social media gurus. Those get-rich-quick influencers, skip them. Stick to experts with solid records. Second is hot tips and inside rumors. That next big thing tip from your cousin's friend's uncle, treat it like a gossip. Fundamentals over rumors. Third is over-reliance on one source. Don't just camp on one app or blog. A balanced view, just like a balanced portfolio, keeps you grounded. Last is over-the-top jargon. If it sounds like it's trying to confuse you, it probably is. Stick to insights that you understand. Next is market hype and emotional headlines. Headlines screaming crash or boom can get you hyped or scared. Look beyond the noise. So here's the takeaway. Staying updated doesn't mean keeping a detailed spreadsheet of every stock. Just a bit of daily reading, some quarterly glances, and you're good to go. This small effort can make a huge difference in making informed and confident decisions. That's a wrap for today's episode. If you enjoyed this or found it helpful, hit that like button and comment down if you have any other queries. Stay alert, stay smart, and happy investing. Investments in securities market are subject to market risk. Read all the related documents carefully before investing.